For more on the markets, we're joined now by Kate Moore. She's Chief Investment Officer at Citi Wealth. Good morning.
Good morning. We're
at a crossroads here, I think. The market's up since the April lows, I think 30% or something. I mean, that is staggering in a 100-day move. It's not quite unprecedented, but it's pretty damn close. So are you bullish? Did you ever get bullish, number one? And are you bullish now?
Yeah, I think, Joe, we talked about this.
Oh, we have. I know, but that's a big thing to miss, 30%.
Well, I didn't miss the 30%,
okay.
And we need to underscore that. I was not out of the market. I was just
when you were on the show, you were not bullish. When you were on the show, you were. I talked to you about it. I talked to you about it. These are all right here. Your concerns, and the market just went right through them. Right?
I think it's prudent as an investor to look at the risks and opportunities. In some cases, I was highlighting some of the more of the risks, but we never were out of the market. In fact, we've been participating, particularly in the large cap rally. We did not participate as much in the August small cap rally, but we've had really strong performance actually year to date, even though we talk about some of the risks and some of the concerns and some of the uncertainty that's been overhanging investors.
You have another chance now. What do we do here?
You know, I always like equities for the longer term. I think a lot of people are expecting consolidation over the next month. They're talking about seasonality, of course, and some concerns around the Fed and what the AI impacts may have in terms of the labor force. But I still believe in the ability of U.S. corporate management teams to manage their margins and to deliver on the bottom line. That's certainly what we saw in the second quarter. And I am not in a situation, even though I think about the risks, where I would be going underweight U.S. large caps.
Do you have your calculation at Citi for 2025 EPS growth? Where's it going to come in? Like someone said 11.5%.
Yeah, I don't forecast the EPS growth myself.
Well,
Citi Research does.
This has already happened. What's your calculation for what it was for this year, approximately?
You're asking for the first 2 quarters of 2025, Joe?
Yeah. Or what do you think it's going to be? Okay, you don't want to give me the first 2 quarters. What's already happened? Is it 11.5%, or is it less? And you won't forecast next year either. Then for earnings per share.
Well, I don't publish forecasts, Joe. But what I will talk about is that I am expecting high single digits earnings growth for the full year 2025. I think it's reasonable to expect, even if there's some economic slowdown, that we can deliver those kinds of numbers in 2026. The thing that I need to be focused on, of course, is whether or not we can get multiple expansion from here. That would add another leg. I'm a little bit more cautious if we have some economic headwinds.
So high single digits both years?
I think that's a reasonable base expectation.
So then interest rates probably matter for multiple expansion?
I think interest rates do matter for multiple expansion. And like many people, and unsurprisingly, we're expecting a rate cut in September. I think, the October side is up in the air. December, more likely. But I think people who are planning on a rate cut every meeting from now until, say, the midpoint of 2026 may find themselves disappointed. That we're likely to see the Fed pause and evaluate the data. And we're expecting macro volatility over the course of the next 6 months.
The multiple, if we get high single-digit EPS, so let's say we get that in stock market return, you say it depends on multiple expansion. Would your view of what the Fed's going to do result in multiple expansion, or is it already built in? I'm just wondering whether we could expect greater than high single digits.
Yeah, it's going to depend sector by sector and industry by industry in our assessment. So in some places, particularly rate-sensitive areas, we would expect to see a little bit of multiple expansion. In some places like AI and tech, I mean, most of these companies, their returns have been, closely in line with earnings. So we could see a little bit of a multiple expansion if there's new innovation, or if we're starting to find more use cases where AI and technology adoption are leading to productivity gains.
Can I just throw this out to the table? Like, what is the market thinking now? In April, when the tariffs were brought in, the market panicked.
Yeah.
Thought, oh my gosh, this is going to collapse the economy. Now you've got these courts that have ruled against allowing the president to do these things. The knee-jerk reaction on Tuesday, the first trading day, was to trade down initially. But what does the market think? Does the market want these tariffs to go ahead and stay in place at this point, or would it rather see them disappear?
I think the market wants certainty. And at this point, whether or not it's the tariffs that were originally announced in April or some future version, they just want to be able to program this stuff into their models and kind of move forward.
But the panic's not out there anymore about the tariff.
I don't think there's much of a panic. And when you look at analyst estimates, of course, there's been a nice upward revisions trend. But many people are now kind of fading the worst case scenario, not just in terms of tariffs, but even today's present tariffs. They're expecting things to fade from here. So I don't think analysts or corporate management teams can really project what their cost basis is going to be like, which is why we're seeing them be, so careful on the margin and really try and kind of manage to their bottom line.
Andrew Harvard, judge, says you can't do that. Judge says, can we look at this positively? Not necessarily that that's the end result of everything, but that
a check and balance.
Yes,
that's what you would look at it as.
There's no king. There's no king. Unlikely that Trump will get rid of either the courts or Congress.
Right.
And it's still working at this point.
So far, so good.
That could be a positive. Because then the worst case scenario of the end of democracy and hence the end of the world, we can take that off the table, maybe, for a while.
Markets are certainly not pricing in the end of the world.
It only can happen once.
Yeah, well, the end of the world only can happen once. But I would say this, to your point, Becky, in terms of overall investor sentiment, it feels that people are a little bit more cautious going into the fall because of the strong run we've had over the last couple of months. That's kind of a normal regrouping, and we're expecting a little bit of consolidation. But I still think the majority of people expect we're going to end the year higher. I'm in that camp as well. Joe.
Well, God forbid I ask you if you had an S&P price target for this year or next when you won't even do earnings per share. But do you have any S&P price target for this year or next? Or you don't?
I think it's reasonable to expect that we'll be up a couple percentage points by the end of this year from current levels.
From where we are.
Yes.
Okay. And then next year, all bets are off.
It's pretty hard to forecast, this far out, 15 months out where we'll end 2026.